Okay, fine. Kalpen, what is the DSP philosophy? You are MD and CEO of DSP Mutual Fund. DSP has had a very long journey here in India. So explain what DSP is all about and what is your investment philosophy.
Sure.
Without going into product specific.
So, see, DSP as a group is around 160 years old. नहीं किया होगा.
160, that is almost 90, 100 years with the Britishers.
Yeah.
So people call it a conservative product. Are we too conservative as an industry?
No, so mutual funds also they went up 3 to 5 times, whereas the market went up only one time. So they give you very fast, quick returns.
और उसका अल्टीमेट गोल ये है कि इतना पैसिव इनकम क्रिएट हो जाए कि योर इनकम फ्रॉम इन्वेस्टमेंट सरप्लस इज मोर देन द इनकम फ्रॉम योर एक्टिव बिजनेस और प्रोफेशन. देन द वर्ल्ड इज योर्स. सो इफ आई एम गेटिंग दिस लग्जरी,
What is your asset allocation?
व्हाट इज माय एसेट एलोकेशन? ओके.
Hello and welcome everyone to AUM Finance Podcast. This podcast discusses the first principles of investing and is for informational purpose only. We intend to add to the body of knowledge. Please consult your financial advisor before taking any investing decision.
Okay, fine. Kalpen, what is the DSP philosophy? You are MD and CEO of DSP Mutual Fund. DSP has had a very long journey here in India. So explain what DSP is all about and what is your investment philosophy.
Sure.
Without going into product specific.
So, see, DSP as a group is around 160 years old.
Oh, 160.
Yeah. So, we make this statement with a lot of responsibility that पैसे के बिजनेस में, फाइनेंशियल सर्विसेज में इतना लंबा विंटेज इंडिया में बहुत कम ग्रुप्स को मिला है ये एडवांटेज. तो शायद कुछ सही किया होगा या गलत नहीं किया होगा.
160, that is almost 90, 100 years with the Britishers.
Yeah, so even the group was one of the founding members of the Bombay Stock Exchange and was has been in many lines of businesses: investment banking, wealth management, private banking, asset management. The DSP group was the one which initially brought a lot of FIIs into India. So the first round of global capital that came to India was when DSP played a very pioneering role in investment banking through their equity capital markets, where they went to the top 400 entrepreneurs of India who were listed in the stock market and said that why you should diversify and get global investors as well. So these are very seminal moments in the journey of capital markets of India, where we became in a way liberalized from global capital perspective. So that's the role that the group has played. Now, as we play this innings of money management for Indian and global investors, we have 2-3 principles. The first principle is honest asset management, because we realize this is people's hard-earned money, and we are also in an industry where fluctuations and uncertainty is a very important daily ingredient. Nothing is certain in the near term. Most certainties are only
long term,
after 5-10 years.
Yes.
So there are always anxieties. So we want to, be very honest. We want to be very authentic. We want to, guide our investors always by showing both sides of the coin. We don't want to always only glamorize investing. We also want to highlight when can, what are the pitfalls of wrong investing? What are the pitfalls of chasing our own best performing funds if you are not suitable for that fund, or that fund is not suitable for you. So our attempt is to, try to manage money with responsibility and honesty and authenticity. At the same time, how we communicate about this from a personal finance lens is also about seeing things as they are. So when we open our small cap fund for subscription after 4-5 years of not taking money because the category had become overheated or so on and so forth between 2017 to 2020, there are 2 routes we have a choice to take. We can show that this fund in 20 years of inception has gone up, let's say 70 times, is one route of showing it. And the second route of showing is that the worst case 1 year return could have been minus 65%, which was the worst case drawdown. Now the first route will be appealing. It will excite a lot of people to put money, but they will come seeing only one side of the coin. The other side of the coin is temporarily it can lose 67% in the short term, and it will recover provided you don't get out. Now, investors need to know the other side of the coin so that, when those drawdowns happen, they stay invested. They don't panic. They actually take advantage. So our attempt is to, communicate with, objective data and communicate risk and rewards both. We resist from communicating rewards alone, because what ends up happening is that people then do not recognize risk at all. And forget risk, they do not recognize volatility at all. And when volatility strikes, maybe they'll feel cheated that, okay, you had shown me 90 times, but you never told me it can fall. And after it falls, you come and give me all the gyan. It has no meaning. So that's one, operating way of life. When it comes to investing your money, so today we have 35 lakh Indian investors who invest with us. We have few large global investors who invest with us.
What would be our AUM?
So currently, the Indian money that we manage is around 1.3 lakh crores across 35 lakh investors, and then we manage another around 20,000 crores of few global institutions. Between debt and equity, our split is around 75 equity and 25 fixed income. But we are, agnostic to that. For me, it's not an award or a badge that we have more equity or less equity. It's immaterial. Ultimately, it's your money. It's not my money. So whatever you give us, we want to do justice to it. And how do we do justice to it? The approach of managing that money, again, is by keeping in mind. So our whole intent is that, recognize risk, reduce risk, and then build portfolios. So for that, obviously, all the study required to see how cycles behave, how companies behave, how various asset classes behave from a risk perspective, from a cycle perspective, we try to minimize and then build portfolios. And second is, we make a lot of attempt to articulate our investment philosophy and our ideology, and we put it out publicly on our websites. For each of our strategy, we have different styles, we have different strategies, so we upfront highlight that, so you as an investor can choose where you are aligned. Now, of course, a lot of investors, in fact, most investors say we don't care, or we don't even know how to interpret or read, because we are not fund managers. आप ये किसके लिए लिख रहे हो?
बराबर.
But we still write so that we are accountable. We stick to that ideology. We don't, keep changing because markets keep changing. So our whole idea is to be very transparent in the way we manage money, upfront highlight. Now, while it is all written, but in very simple terms, if I have to explain how we manage money, goes back to what I told you, that broadly, what are the secret, actually it's no longer secret, everyone knows it, but how does money grow is what I said some time back also, that invest in good businesses or / asset classes. At reasonable prices or cheap prices. Cheap prices are rare these days because a lot of things are fully discovered. Unless there's a crisis. And crisis में वो good है या bad है वो समझने में confusion होता है. Because then everything is hazy. In crisis, everything is hazy. So invest in good, at good prices for good time horizons. Broadly, these are the three rules.
Invest in good, at good prices for a good time horizons.
Right time horizons. So if we generally do that, and then we don't come in the way to interrupt compounding, then automatically, our investors will get reasonably good experience. And that has broadly worked for us. Now, these things temporarily don't work because nothing works 100% of the times. Because, whenever one trade does very well, something else goes to the other extreme. And in the next 1 or 2 years may end up doing very well. But we can't move big sums of money and keep constantly changing styles, changing flights. Midway, once the plane is taken off, I can't say, "Ye thoda slow ho raha hai. There's the next plane going faster, let me jump in." Because there is risk of leakage, there is risk of accidents there. So then we broadly stick. So to give you a sense, most of our funds, we own companies for 5, 6, 7 years. As long as broadly they are executing well, the sector is doing well or is likely to do well, and the prices are not irrational. There are times some of our winning companies in our portfolios, we have been holding it for last 8 to 12 years.
Okay.
Where if the company is executing, even if it becomes slightly expensive, but we don't mind holding on to it. There are times great companies going through difficult phases because that sector is going through a bad cycle and the stock is hence not performing. We don't mind adding more. We don't mind, partnering with the business because, like I said before, that you are owning a business. So if the business has long-term, reasonably good prospects, you don't get in, get out, because getting out is easy. Getting in again, our biases come in between.
Yes.
So our template again is generally, patient investing and sensible investing.
Okay. Kalpen, you in your profile it is mentioned that you love behavioral finance. So explain what is behavioral finance. How does an investor's behavior come in the way of his wealth creation journey?
So maybe I need to change my profile, or maybe someone in my team has made it. So it's not that I love behavioral finance.
Okay.
Or, I only believe that our behavior does play an equally important role over and above our skills in terms of achieving our investment results. So we may have great skills, but if we behave badly, then we are doing injustice to our money. So good behavior is always avoid big mistakes. Good behavior is don't buy a good asset class or a bad asset class at high price and sell low, which is generally what many investors end up doing, because God, if God exists, has made us in a way. The survival of human race is because in old days, thousands of years back, whenever there used to be some anxiety in a bush, we would not think behaviorally sound or rationally to say whether ये हवा का झोंका है या ये कोई एनिमल है जो मुझे खा सकता है. We first run. So flight has been a survival hack. Now, normally in investing, we tend to follow the same, because if millions of years of our wiring is flight on fear, we would do the same in every part of our life, and it actually works.
So as soon as the stock market starts crashing,
so the only place or
run away.
Very few places where flight on fear does not work is in investing, because generally fear creates opportunities. So when it comes to investing, we may need to operate a bit differently than what is wired in our DNA.
Okay.
And what is wired in our DNA is almost impossible to erase. मेरे कितने भी sessions आप सुन लो या आप कितनी भी किताब पढ़ लो, odds are very low that when sharp periods of fear or panic happen, we will freeze and we will fly.
So is the wiring, as Warren Buffett says, I am wired differently.
So there are very
few. Wired differently. There are people like that.
So you have to learn that wiring over time by creating either systems, structures, formulas, automated investing templates, or you are designed like that.
Or the mutual fund industry has invented an instrument. Just
Which
do
is
an
asset
SIP
allocation
and don't stop an SIP when the market is down. In fact, that's the time to increase it.
So what happens is, again, behaviorally, if someone has done 10-year SIPs, which has created a meaningful amount, and suddenly in that year market is down, you think about the loss of that capital as if it's permanent loss. Now, many times these losses are very temporary. If you have learned history or seen market cycles or seen NAV cycles, you would probably realize that after sharp falls are sharp rises recoveries also, provided the underlying is sound again. So now that wisdom is available to only those people who are willing to look at cycles and not just 1 year, 2 year, 3 year returns. Now, most investors chase just 1, 2, 3 year returns and not see cycles. And that is where most accidents are made. So if you learn the right approach of investing, the right data points to choose before you make your investment decision, you have better odds versus the whole crowd. See, generally, when you're playing a crowd game, the returns will be what the average of the crowd will earn. Now, if you want to stand out, the template, the approach, the behavior, the skill set, all of that has to be a bit better or a bit different.
So that reminds me of a saying: if you want to make more money than the crowd, you have to think differently from the crowd. तो भीड़ से अलग सोचोगे तब भीड़ से ज़्यादा पैसा
और सही होना भी ज़रूरी है,
और सही होना भी ज़रूरी है, तो आप दूसरी तरफ भी जा सकते हो.
So you might be below average.
Yes. Okay. How have you seen the mutual fund industry evolve over the last decade, and where do you see it 10 years from today?
One of my very senior colleague, he leads our digital business. He comes from US. I was shocked to learn yesterday that this whole concept of SIP is not available in most countries outside.
Really?
Yeah. तो जो automated जैसे हमारे यहाँ provident fund में पैसा कट जाता है, in US for example there is a 401k, but you can't go to the website of a distribution company or a mutual fund and straight away click 5-10 buttons and start an SIP and just finish it.
Wow. So the SIP that we take for granted in India is not something which is normal everywhere, even in US.
Yeah.
Wow.
So I think India has obviously in recent times seen huge advances in the payments processes, the ecosystem and UPI the infrastructure. But coming specifically to mutual funds, like I keep saying that we are the most cost efficient, tax efficient, liquidity efficient industry in the fund business around the world. Many places around the world there are entry loads and exit loads. in India, like I said, regulators have done a brilliant job to make the instrument as good as if saying that अगर खुद का पैसा डालना है तो where should be the best way of investing. So I think that is a very very big advantage that the fund product has. Number one. Number two, from an evolution point of view, if you see so many rules over time have come in, where regulators have also ensured that competitive practices get deployed for the benefit of investors. So more competition means customers benefit end of the day. Third, over time, from a risk management point of view, again, many new practices have been deployed to ensure that most risks are either well documented and made aware of, or their money is managed keeping prudence in mind.
Okay.
Fourth, I have seen collective efforts by the industry, which is the industry body AMC, our partners in distribution, who again come with this deep commitment of thinking long term and adding value to the lives of their investors by guiding them right. Media, all have collectively played a very important role to democratize this instrument and to make create access in the smallest of parts of India. Today, if you have a mobile, you can become a mutual fund investor. Mobile and bank account, these are the only two things. Of course, you need KYC and Aadhaar. If you just do these 3-4 things, you can become an investor. Is the easiest way of investing, tracking, managing your portfolio. And the other thing I've seen is the industry is fairly simple. I keep saying again that higher the simplicity, higher are your odds of returns. So the instrument is very simple. You can understand it very well. You can access insights and information and details about the product very easily. Pros and cons, good times, bad times, all of this is very easily available. So our industry has, through its transparency, made a lot of efforts to enable the investor not just from an operational convenience, but even an intellectual, wavelength to come and understand, what are the drivers of risk, drivers of return, so that you can take better investment decisions. So I think I am very happy with the way structurally the category is progressing. And one most important thing is, like I said, behaviorally we are wired to sometimes get greedy and take wrong decisions. But the biggest defining moment of our industry in the last 5-7 years is this confluence of two powerful discipline tools, SIP and asset allocation. So in my view, 85% of investors are investing through SIPs, and in the last 7 years, almost 60% of money has come in automated asset allocation. Now, in the long run, the winners are those who will do these two things.
SIP and asset allocation.
Because what is asset allocation doing? It is rebalancing at extremes. When stocks become euphoric or an asset class becomes irrationally priced, it will trim that and move to another asset class which is not irrationally priced. So what you should be doing as an investor, the design itself is doing it. And the second thing is, take advantage of intermittent market fluctuations through time diversification. SIP is taking care of that. So both these instruments, in a way, minimize volatility and actually take advantage of volatility. So not just minimize vol, but take advantage of fluctuations so that you can remain invested for long. So I think, one reason why people say that in this cycle, even when markets crash, investors are not panicking, is because NAVs are not crashing as much because they are, large amounts of money.
It's coming through SIPs.
One is, and secondly, is deployed in an asset allocation fund where if markets are falling 20%, their NAVs are falling only 7 or 8%. So investors are okay to withstand that type of small shocks. And thankfully, the corrections are shallow or faster. So the recoveries have been fast. Now, our real challenge will be if at all we see 5-7 years.
So is it affecting price discovery?
Could be. Definitely when more flows, more money chases less number of stocks, price discovery tends to get affected, asset classes become expensive. But there, I still compliment the responsibility of the fund industry where you're upfront seeing fund managers calling out that
we don't want to take SIP, like
not just
small
that,
cap funds.
That markets are expensive at times, moderate your return expectation, increase your time horizon, choose asset allocation funds. You don't have to necessarily choose a pure equity fund if you cannot digest what. So you have a range of products. You have a product for one-day investment and you have a product for 1 century investment. So the whole range is there. So I think in a nutshell, I think the foundation for an investor to build his wealth depending on his level of conservatism, through diversity of products is available today, access is available today, information is there. So I only see, I hope more investors take advantage of this.
Okay, and where do you see us 10 years down the line?
See, I can't forecast. I am not a believer of forecasting, but I do see that we will have more, successful investors. If so far 3 crore investors have taken advantage of mutual funds, I hope, we can add one more zero over the next 10 to 20 years.
How many investors we have today?
Roughly, as an investor, as an industry, we have around 3 crore investors, 3.5 crores. While we are a country of 140 crore Indians, but not everyone may really have that much of savings to come and save on a monthly basis. But if we can add one more zero over the course of next 1 or 2 decades, I think I'll be very happy.
Okay, so only 3 crore mutual fund folios.
Yeah, folios will be more. Unique investors
unique
will be
PAN.
Unique investors will be lesser.
Okay. So we have a long runway then, Kalpen.
So I always tell people when I ask this question that we should not worry industry का क्या होगा, बाकी 10 crore investor का क्या होगा, हम क्या कर सकते हैं. As an investor, how can we benefit and take advantage? That is the core focus, and the fact that there are less investors and more will join is just to highlight that this is a very credible vehicle of sustainable long-term inflation-beating outcomes. And more investors should learn how to take advantage of this.
Okay. You used asset allocator funds. So you want to highlight at a very basic level what is asset allocation, how a mutual fund industry using these products.
Okay. So see, in a cricket match or in a cricket team, we need all types of players. We need an opening batsman who can score fast. We need also a batsman who can defend very well if the bowling attack is stronger. We need a wicket keeper, we need fast bowlers, we need spinners. We don't go into any match only with 11 fast bowlers or 11 spinners or 11 batsmen. Asset allocation is basically a similar concept where in your portfolio you have a mixture of asset classes where if one doesn't do well temporarily or one gets out, you're not out of the game.
So asset classes are different investment options.
Different within the same fund, there are different asset classes.
Within mutual fund, you can buy equity, you can go for debt, which is like an FD. Yeah. You can go for gold, you can go for international equity.
Because these 4 asset classes many times operate in a different ways. So when Indian equities was retired herd between 2008 to 13, gold was playing like Sachin Tendulkar, and it gave around 16-17% return. Now, if you didn't have gold at that time and you had only equities which was down 40% and then almost zero returns, most of us would have got restless, anxious, panicked. We are not loyal to slow returns or low returns. So we would have got out and then got into gold after it has given 20%.
So it's like पहले 4 batsmen हो गए 6th or 7th down जो आया, he maintained the score.
Yes. So asset allocation fund allows you to take advantage of the cycles of multiple asset classes. Of course, it has to be very thoughtfully put together. You can't just randomly own them. And you have to own the one which has better future potential in a bigger degree. And not what has already delivered return.
So in a mutual fund scheme, you are giving in these funds, which are known as, which I'll call as smart hybrids.
Yes.
You're putting Indian equity,
global equities,
which has its own global equity, arbitrage. You're putting bonds and you're putting gold. और ये सब एक साथ ऊपर नहीं जाते और सब एक साथ नीचे नहीं आते. So कभी ना कभी sometimes some batsman will become the hero.
Yes.
Of the
but at the same time, हर समय some batsman will also be a zero. Because minimum you will have some exposure.
So Sachin also gets out on zero.
Yeah. So what again one should remember is if long-term returns of equity is let's say X%. Or even in the medium term, if equity is giving the fastest return, and this fund may not have everything in equity, 30-40% will be in other asset classes, it means that it can definitely underperform the best performing asset class at all points in time. It will always underperform the best performing asset class at all points in time.
Which one?
A hybrid product.
Okay.
Because it is not owning the best performing asset class in entirety, right?
Okay, understood.
At the same time, it will never be the worst performing fund because it will not have all money in the worst performing asset class because something which is doing well also is there in the portfolio.
Okay.
So it will give you middle of the path returns. It will not give you extreme outcomes. It will not give you super exhilarating upcycle returns. It will not, give you worse returns in a big crash. It will keep you alive so that you continue to stay invested. I think the game in investing that most people need to realize is not about,
You
what
have to
will
finish
give.
the race.
We have to last
So
first.
there's a very famous quote I like that. In order to finish first, you have to first finish.
Say it a bit differently, saying that to come first, first last.
हाँ.
You have to last.
तो वही in order to finish
Means
first,
the
you have to
same.
first finish.
First
कई
finish
बार
the
आप
game.
फर्स्ट आने में इतने चले जाते हो कि रेस कंप्लीट ही नहीं होता है, बर्न आउट हो जाता है.
बिल्कुल. So वो
बने रहो, इन्वेस्टिंग की दुनिया में बने रहो. ऐसा ना हो जाए कि टुडे मॉर्निंग अ वेरी गुड क्लाइंट वाज अर्निंग वेरी वेल told me I have to stop my SIP because I am in financial problem. So that's where it is coming from कि आप लड़ाई में बने रहो,
बिल्कुल.
रिटायर्ड हर्ट मत हो जाओ और मैच पूरी कंप्लीट करो.
Complete, absolutely.
Maybe you can win then.
So if you complete, most likely you will achieve your objectives. And provided you have thoughtfully mixed your products.
Yeah.
So if your race is just a 100-meter race, then don't have equities.
Yes.
Then you need a different instrument. If you want to go, just 100 meters from one home to the next home, you are not going to take a flight.
Then answer this question कि some people have this misconception in mind that if I am a fast return or big risk taker, mutual funds are not for me.
So depends again.
Some people call it a conservative product. Are we too conservative as an industry?
No, so mutual funds also have thematic funds where you can, play quick cycles, where one asset suddenly, let's say during COVID times, metal stocks and energy stocks had crashed far more than many other sectors. They were already cheap and they became far more cheaper. And in the next 1 year, they went up 3 to 5 times, whereas the market went up only one time. So they gave you very fast, quick returns. If you invested via these thematic funds. If you got into tech stocks, global tech stocks, again at the right times, in the next 3-4 years, they give very fast returns. And through mutual funds, you could have invested in some of the global tech giants, semiconductor companies, social media
Nvidias
giants.
of the world.
Yeah, but most likely we talk about Nvidia after. See, we
After
start
the rally.
knowing about Nvidia only after it is up 300%.
So I played that game, and you are right. I mean, so if you had bought it at the right time, and nobody had to identify Nvidia or any other stock, we are wiser in hindsight.
Yes.
There are US equity funds which you people provide. There are FANG.
There will be some percentage in that.
So if you own that entire basket,
Absolutely.
and if you happen to remain investing during the bad phase, you will
have, absolutely.
So it's not that mutual funds are very conservative. We offer the entire bouquet.
Absolutely.
We offer very aggressive funds and very conservative products also, and we are also in between. Okay, now I think we do the turntable.
Sure.
So this is a section where if you intend to ask me any questions, 1, 2, 3, you can.
So I'll ask you, what is your asset allocation?
What is my asset allocation? Okay. So I am a hardcore equity guy.
Okay.
I try to put money in debt funds, liquid funds. 1 महीने 15 दिन से ज़्यादा नहीं रहता है. I would be 120% in equity, meaning that 20% is loan that I have taken. I don't recommend that to my clients. I don't practice like that as far as my clients' money is concerned. But this is my money. As Rakesh bhai would say, कि I am only answerable to my wife. So I am only answerable to my wife and daughters. So 120% asset allocation, 30% US equity, 70% Indian equity. First, making the base and contingency reserve via the mutual funds, and only incremental little bit over and above that into direct equity India, and which again I am also now starting to believing that is it worth the time. So I did a good bet in Indian equities a couple of years back, starting from Bajaj Finance, and in US equity 2 years back starting from Nvidia, made a killing. But then again I keep on rethinking, if mutual funds both in India and US via fund of fund, if you are getting them, is it worth reinventing the wheel? Although it gives you a kicker and it keeps you on your toes.
True.
So 120% in equities.
And what's your takeaway about DSP?
What's my takeaway about DSP? So DSP, see, I believe the head determines how the organization is. Right now you are heading it. So DSP, in fact, I've been in this room 3 or 4 times. I've been here as a blogger. I've been here as a distributor. Okay, so I've seen different heads, and whenever the head changes, the organization color changes over the years. So right now it is being colored by you I've been known you. We've been in flame together. I've known you before. So your philosophy, I know. My philosophy is also like that. Believe it or not, my first, what do you say? The primary when I give lump sum investment to my client, when I make their lump sum investment, the flagship product is a asset allocator.
Okay.
Not an equity fund, not a large cap fund, but an asset allocator. I believe risk को control किया तो return control हो जाता है. And you bring that philosophy on the table. I would classify your organization, whatever little I know, as moderately conservative. You prefer to err on the side of less returns, but more safety.
Sure. So I wouldn't like to be positioned as less returns.
I might be wrong.
No, fair.
That's my perception.
Our intent is to control risk. Returns you don't know.
Yes.
And last question is, in few words, how will you explain the rules of investing
How will I explain the rules of
to
investing?
a prospective investor who's not an expert from the market?
So one, investing is about creating passive income.
Okay.
Unlike our parents and grandparents, आखिरी दिन तक के गल्ले पे नहीं बैठना है, ठीक है? It should be your choice. If you love what you are doing, like you and I love what we do, and it's a mental work. But there will be a time when आपका टिकट कट जाएगा. So you have to live life before that and do much more than your work. तो इन्वेस्टिंग आपको रिलीव करता है आपके डे टू डे लाइफ से. एंड आई बिलीव रूटीन इज़ द बिगेस्ट, इट्स अ रावण. सुबह उठते बेल बजती है, वी बिकम अ डिफरेंट एनिमल. वी डोंट नो दैट. और वो रूटीन कई बार डिकेड्स तक चलता है. इन्वेस्टिंग रिलीव्स यू फ्रॉम दैट. आई एम गिविंग अ वेरी डिफरेंट पर्सपेक्टिव. इफ यू क्रिएट अ पैसिव इनकम, one fine day you can tell your boss, you can tell your clients also कि tata bye bye, I'll do things in my own way. And everybody has to discover their own swadharma. So yesterday I was podcasting with Chanakya, Dr. Radhakrishna Pillai, right, who's written who just inaugurated the 22nd books of Chanakya, and I asked him what is swadharma. So we have to discover our own कि मैं आया किसके लिए, मेरा क्या purpose है. Might sound spiritual, but when you do what you love, then you are not working anymore. तो ये इन्वेस्टिंग आपको हेल्प करता है. तो एक प्रॉस्परस बिजनेसमैन भी अगर मुझे बोलता है आई हैव सो मेनी फैक्ट्रीज एंड ऑल, आई सेड उसके लिए आपको काम करने जाना पड़ता है ना. इन्वेस्टिंग पैसिव इनकम क्रिएट करके देता है, और उसका अल्टीमेट गोल ये है कि इतना पैसिव इनकम क्रिएट हो जाए कि योर इनकम फ्रॉम इन्वेस्टमेंट सरप्लस इज मोर देन द इनकम फ्रॉम योर एक्टिव बिजनेस और प्रोफेशन. देन द वर्ल्ड इज योर्स. So if I am getting this luxury of sitting with you and having this conversation, it is because I have created certain world out there where it allows me that luxury.
Great.
That is investing according to me.
Good to know.
Great. So we'll end it with rapid fire. Yeah. Right. So this is known as the fast and furious round, where I ask you a couple of rapid fire questions and you take your turn to answer. EQ or IQ?
Both.
But you have to choose one.
IQ.
IQ over EQ, okay. Liberal arts versus commerce background. If somebody applies for a job at your...
Liberal arts.
Liberal arts, okay. You want to elaborate why?
Because the world is, not only mathematical. There are many, certain and uncertain dimensions. And I think whatever experience I've seen of successful leaders around the world, they do have liberal arts background. And it also helps you understand things in a more humbler way.
Okay, wonderful. And everything cannot be quantified.
Yeah.
Everything cannot be put in numbers.
Absolutely.
Okay. Soft skill or analytical mind? Whom will you select as your fund manager?
Analytical mind.
Analytical mind, okay. Because fund manager. And for other roles on the marketing side?
So again, context to context. Marketing will be someone who understands consumer simplicity. So there I would prefer soft skills, creativity.
Okay. Financial asset versus physical asset?
Financial.
Financial, okay. Indian equity versus any other geography?
Currently it's 45% Indian and 25 global in my portfolio. So that is my ratio.
Okay. Equity mutual
In fact,
fund?
I would just say that good equities rather than Indian or anywhere. I would say
good. I like that term good that you defined today. कि इस समय जो सही है वो करो. Okay. And that is also a definition of dharma.
Yeah.
Equity mutual fund versus smart hybrids that you are known for.
So again, like I said, when markets or equities...
So can I rephrase the question?
Yeah.
You have to put money somewhere, a good portion of your net worth, let's say 30%, and go away for 10 years and you cannot revisit it, then where will you put money? Equity fund or smart hybrid?
Equity.
Because it is 10 years.
Yes.
You don't know how the 10th year will end.
Because I can live through fluctuations.
You don't know how the 10th year will end.
It's okay. So I will wait for the 11th year. Because if
Okay.
the 10th year is bad, generally the 11th year is very good.
Okay. Listed versus unlisted equity?
I only invest in mutual funds which invest in listed
Listed
equities.
equity. Okay. Great. Kalpen, it was a pleasure. Thank you for your time. I value the time that you have. You have responsibility of millions of investors out there. But I am sure whatever we've discussed here, some person out there, she or he, when they listen to it, and if there are some takeaways for them, it is going to benefit and change the lives of few, if not more.
Thank
So
you.
thank you for your time. Pleasure.
Thank you.
Thank you.
All the best.
Thank you for listening to the AUM Finance podcast. Remember that all investments are subject to market and other risks, and one should read offer docs and other documents carefully before investing.